On the back of nervous and volatile trading, Wall Street is coming to life in October after the slump in September. Despite global political jitters, the benchmark stock indexes are gaining ground and are poised to open a new week in the green. The economic calendar contains several corporate reports and macroeconomic data. The market is talking a breather on a Monday. The major stock indexes had a turbulent session on a Friday and closed mixed. The S&P 500 closed 0.5% down at 4,327 points. Today, the New York pre-market is more optimistic, but Wall Street still lacks bullish momentum. Demand for the US stocks remains weak. The S&P 500 is expected to trade between support at 4,332 and resistance at 4,357. If the index breaks upward, it could climb to 4,382 and even higher to 4,405 points. The three major indexes opened higher but lost their gains because a preliminary consumer sentiment index in the US looked a sharp increase in October. Quotes of Treasuries went up as investors flocked to safe haven assets. Crude oil prices jumped by 5.8%. Growth of Treasuries put pressure on the stocks of the high-tech giants sensitive to the Fed's interest rates. The bond market overshadowed the optimistic opening of the season of the corporate reports. Top American banks were the first to report their earnings. Another factor to dampen optimism on Wall Street is the tensions triggered by the conflict between Israel and Hamas. Yields of long-term US Treasuries rose because the US is striving to soothe the conflict escalation. US State Secretary Antony Blinken arrived in Israel for the talks after US high-ranking officials warned that the conflict might persist for a long time. Treasury Secretary Janet Yellen stated on Monday that it's too early to speculate about the economic fallout of the conflict between Israel and Palestine. The consequences will depend on whether the clashes will spread over to the broader Middle East. As for the economic calendar, it's not loaded today. The New York Empire State Manufacturing PMI, released before the opening bell, hardly influenced market sentiment. The index declined to minus 4.6 points in October, following a 1.9 in September, and the decline was milder than a decrease to minus 7 in the consensus. New factory orders went down, and the report on the US labor market indicated modest growth in employment and average working week. Companies kept optimism for the 6 weeks ahead. Philadelphia Fed Patrick Harker is due to speak later tonight, and he said on Friday that the US Central Bank had probably completed the cycle of rate hikes. Federal Reserve Bank of Chicago Austin Cosby acknowledged the trend of easing inflationary pressure in the United States. He said it was not a temporary burst. Fed speakers are entering the silent period next week before the policy meeting, and the main speaker this week will be Jerome Powell, who will make remarks on Thursday. Investors are anticipating crucial economic data, including retail sales for September, to assess consumption activity in the United States. Consumer spending accounts for almost two-thirds of the US economic growth. Long-term consumer spending became the cornerstone of economic resilience. However, the survey released on Friday showed that consumer sentiment worsened for 3 months in a row. The US currency is opening a new trading week cautiously, given in to major currencies. The US dollar index traded at about 106.40 before the opening bell. The intraday corridor for the instrument is defined between 106.20 and 106.70. Despite a modest decline, the US dollar index remains not far away from a highs reached on a Friday. The US currency gave no response to the US macroeconomic data and rising yields of US Treasuries. Today, the greenback will hardly receive support from the Fed policymakers. On Thursday, Jerome Powell could provide some clues to the Fed's agenda for interest rates and thus clearing up the US dollar's outlook. The Canadian dollar gained ground today, however retracement in oil prices could push the loonie down. The USD CAD pair traded at 1.3630 before the opening bell. Analysts expect the instrument to rise to 1.3699 and an attempt to climb above 1.3773. Oil remains most sensitive to the risk of expanding conflict in the Middle East, which could cause turmoil in other markets, as well as stoking fears of both inflation and economic demand, and the loonie may well benefit from rising supply concerns. The crypto market perked up today. Despite the turbulent beginning of the day, popular cryptocurrencies traded in the green in sync. Bitcoin is logging their strongest performance, having grown by 2.6% to $27,920. The asset is trying to settle above $28,000. If successful, the door will be open to $28,200 and $28,450. The alternative scenario suggests a fall to $27,650. The crypto market regained optimism from the potential approval of the Bitcoin ETF after the U.S. Securities and Exchange Commission decided not to oppose the court's decision on the grayscale Bitcoin ETF. The news that the U.S. government is the largest holder of Bitcoin tokens, worth about $5 billion, also attracted attention. Largely as a result of asset confiscation, the government accumulated a total of 207,189 Bitcoins. In addition, Ferrari has started accepting payments in a cryptocurrency for its cars in the United States and will extend this scheme to Europe. Keep close tabs on the financial markets on the InstaForex TV channel. Welcome to leave your comments and ask any questions. See you online tomorrow.